NIO's first quarter gross profit hit 488 million RMB, marking a 200.5% over-year increase. But their net loss for the quarter was a staggering 4.185 billion RMB, up 9.4% from last year. Friend, just take a look at these eye-popping numbers. Really make you wonder, how can gross profit soar while the company is still bleeding money? Many people I know are hesitant to buy a NIO right now because they're worried about its consistent losses. They ponder, how long can NIO keep losing money if sales don't pick up? What if I buy one and the company goes under shortly after? Alright, my friend, today let's dive deep and tackle these problems and concerns one by one for you. The first one, why is NIO losing money? The main culprit here is NIO's hefty R&D expenses. Even though NIO has slightly scaled back its R&D spending year over year and quarter over quarter, it's still a significant chunk of their budget. Well, NIO isn't just working on one brand or technology. They've got 3 major brands and a dozen full-stack technologies in the pipeline. Here's the lowdown on these 3 brands. The first one is Old NIO, focuses on the high-end market, targeting vehicles priced at about 400,000 RMB. And the second brand is Anvo, which is a new brand. It's all about family cars. And Fireflies is aiming for the compact car segment, priced around 100,000 RMB, with launching expected next year. Now, just think about it. NIO alone has multiple models that require substantial R&D, right? Adding in the new brands, and you can see why the costs are through the roof. Okay, on the bright side, having investment in R&D reflects a long-term commitment to building a robust tech foundation. NIO's technological edge could eventually pay off big time. However, whether this massive R&D outlay translates into real growth, I think it remains to be seen and will be up to the market to decide, right? And meanwhile, take a look at the sales growth. NIO sales just aren't enough to pull them out of the red. Their selling, general, and administrative expenses shot up by 22.3% to grab a big slice of the market. NIO slashed the prices, sacrificing some profit margins in this process. This issue isn't unique to NIO. The entire Chinese EV sector is grappling with the high-volume, low-profit dilemma. From my perspective, while NIO's products are popular, they face a balancing act between R&D investments, market competition, and cost control. If they can effectively manage costs and boost operational efficiencies, there's hope for gradual improvements in their financial health. Well, here comes the worries. How long can NIO sustain losses? Will they go under soon? There's even chatter that NIO operates like a Ponzi scheme, where new buyers' money is a funnel to cover the costs for existing owners. But here's the important fact that we cannot take a blind eye on. NIO dominates these high-end segments. And also let's talk about their battery swapping model, which NIO has been perfecting for nearly a decade. This innovative approach has become a significant draw for customers. As of the latest financial data, NIO has established 2,429 battery swapping stations across China. They've also partnered with 7 major domestic automakers, including Chang'an Auto and Geely Holding, to expand their services. So the likelihood of NIO suddenly going bust in the short term seems pretty slim. Well, maybe you will ask, if not that quickly die, how will NIO make money in the future? Li Shi, the Secretary General of the China-Europe Association for Smart and Connected Vehicles, suggested that NIO's collaboration with other automakers could fast-track the standardization of the battery swapping technology. This move could position NIO as a leader in this area. Imagine if different brands and models of EV could all use the same battery swapping infrastructure, NIO could transform into something like to Shell or Sinopec in the energy sector. NIO scheme plan seems to be service-oriented. As William Li, the CEO, previously mentioned, think of battery swapping like Amazon's cloud. There are striking similarities. First, strong network effects. The battery swapping network is like the cloud infrastructure for the energy internet. Second, large-scale long-term investments. Companies like Amazon and Google put hundreds of billions of dollars into factories and equipment. That sounds wonderful, right? But here's another question. Is this the path easy to tread? I think it's not quite. NIO hasn't yet cracked the profitability code for battery swapping, which is why they're opening up the technology to industry partners. With other automakers joining in, NIO's role as industry standard binders is still up in the air. And as for the biggest hurdle, car manufacturers rely on battery packs for profitability, right? If different brands all use the same battery packs, it will lead to homogenization and fewer profit points. High-end brands like BMW, Benz, and Audi are unlikely to embrace battery swapping because it would erode their differentiation from mid to low-end brands. Declaring that battery swapping will turn NIO's financials around is still a bit premature, right? Let's make a summary here. NIO is at a critical juncture of self-iteration and upward development right now. Given its historically high financial risk, every step NIO takes must be cautious and well-calculated. If NIO can consistently maintain monthly sales at around 20,000 units, it's reasonable to predict a significant elevation of its financial risks. However, considering the brutal market competition and market's reaction to NIO's recent public offering, company's future trajectory remains highly uncertain. Looking back at NIO's decade-long journey, you will notice a pattern. While NIO has generally moved forward, it often takes 3 steps forward and 1 step back. For instance, even now, production capability limits NIO's delivery volumes. As CEO William Li mentioned in the earnings call, NIO's order in May exceeded its production capability, and May's delivery figures represent maximum output possible with current capability. So despite NIO's recent momentum, there's no room for complacency, especially in today's challenging economic and market environments. NIO must continue to vigilantly manage financial risks, enhance organizational efficiency, and constantly deliver high-quality products. And if you are interested in a more in-depth investing report, make sure to check out my analysis report below. So that's all for today, my friend. See you next time.